Wow, what the fuck happened? Tiff Macklin and the Bank of Canada hikes rates, unexpected by most. Everyone's wondering what the hell's going on, and I am stumped. Now, I didn't think there was enough data to justify a hike, but let me tell you this. The Bank of Canada, Tiff and his merry folks over there, they're looking at data every day, and something's startling them. It's episode 134 of the Wise Old Owl Show. I'm Vince Gaetano. Thanks for tuning in. What a shocker. I know that some economists did indicate that there could be a rate hike coming, but I truly believe that it was going to be at the July meeting once some of the data for the May CPI print and some other factors came into play. But folks, unexpected. I predicted that it would be a pause. Was taken off guard when they hiked it on the 7th. And I think this could pose a big problem heading into the summer. As I predicted in the past, I think the third and fourth quarter, the second half of the year is going to be really troublesome for most, as more and more people come up for renewal. And just to put things into perspective on the renewal front, okay, this is the type of renewal offers that Chartered A banks are sending their clients, okay? This is an actual renewal. I'm going to read these rates to you just to give you an idea of where things have gone. So this is a scheduled chartered bank. They're red, okay? They offered a client a 1-year close. This is a prime A client. 1-year closed. They offered $709 as a rate, okay? A 2-year, $659, a 3-year, $644, a 4-year, $634, and a 5-year at $634. Like renewal rates in the sixes, okay? Now, I'm sure if they haggled and try and negotiate, they get a little bit better than that, but it's ridiculous. I think this is where people start to find trouble in making their payments. They're scraping through their savings. They're going to use their credit cards. They're going to use their lines of credits, and it's just going to be a shit show. And folks, for those of you that are trying to figure out what does this mean, okay, I want to bring you back to January of last year, January 2022, okay? If you had a HELOC, which is a home equity line of credit, and you had $200,000 owing on it, your monthly payment, okay, of interest only would be $492 a month. $492. Today, and that was at a rate of prime plus a half, which back then in January 2022 was sitting at 2.95. Today, with yesterday's hike, we're now looking at 7.45% on the rate. $200,000 balance on your HELOC has gone up to $1,242. That's a $750 hike. And folks, that's an increase of 152% in your payment. Okay, the cost of borrowing has gone up 152% on your home equity line of credit. So folks, if you're looking to put a pool in, you're looking to do some backyard rentals, you're looking to do any rentals and you're using your HELOC, that rate's not going to be fun to look at, as it sits in the sevens if you're in a traditional prime plus a half. So what does this mean? So inflation just ticked up a bit in April, right? It went to 4.4% from 4.3% in March. It only went up 0.1%, and it triggered an increase of a quarter point. Now, I didn't think there was enough data to justify a hike, but let me tell you this. The Bank of Canada, Tiff and his merry folks over there, they're looking at data every day, and something's startling them. We have the GDP growth rate for the first quarter coming at 3.1 when everybody expected it at 2.5, primarily driven by immigration. Our population growth in 2022 went up over 1 million people, folks. All those people need to eat. They need to buy stuff. They need to consume. They need to drive prices up. And on the home side, where are they going to live? It's going to continue to drive activity. That GDP growth is primarily being carried by immigration. And guess what? In 2023, They're not stopping immigration. They haven't said it's going to be zero. So more and more people will be coming into this country, both on a full ride of immigrants, and then the non-permanent residents. And just to give you an idea, in 2022 there was about 437 fully ticketed immigrants that entered the country, and 608,000 non-permanent residents, for just over 1 million net growth to the population. Okay, the biggest in quite some time. So we're expecting 1.2 billion people coming in 2023. The first quarter was a record amount. So it's going to continue to drive inflation, and it's going to cause more problems. Things are going to start to break, folks. Things are really going to start to break. The cost of borrowing is far exceeding wage growth. Household disposable income is getting hammered as inflation takes its toll. And this government just continues to spend, just continues to stimulate this economy with more cash, creating further inflationary pressures. So it's going to be an interesting ride. As I always tell people, tighten the chin strap on the helmet. It's going to be a bumpy ride, and it's going to be a long ride. So, where do we go from here? Batten down the hatches, try to pay down debt as quickly as you can. If you got any form of savings that's earning less than what you're paying on your borrowing, cash it in, pay down the debt, okay? You want to get rid of your debt as quickly as you can, and there's no use having any savings tools. And I'm not talking about the registered stuff like, RSPs and stuff like that. I'm talking about little savings nest eggs. If you have the ability to cash those in and pay down your debt to lower the burden on a monthly basis, please do so. Start budgeting. As I've said time and time again, it's very, very important that you look at getting rid of the wants, just focus on the needs, and really buckle down. Now, one of the things that we are seeing is the variable rates. People are starting to look at locking in. We're recommending 2 and 3 year terms. We're looking at different options for people to find access to funds. And, there's some really good tools out in the marketplace that we're suggesting to our clients. If you folks need any help, please feel free to reach out. Our team, myself, will be happy to help you. But this is going to be a tough road. This immigration issue, I think, is very problematic. And it's really going to drive rents up. Okay, the rents are going to continue to spike. And with rates being where they are, we're going to continue to see landlords wanting to recover as much as they can in the form of rent to cover their costs. Now, in Toronto, just to give you an idea, back in 2011, out of the total stock of condominiums in Toronto, about I think it's 27% were rentals. Okay? And in 2021, it's up to 39% rentals. Now I'm going to give you something even more interesting. Out of all the condos built in the past 5 years, 59% of them are rented. So all new condos being put up that are brand new, 5 years or less, almost 60% are rented. And most of these folks are in negative cash flow. Really, really interesting. So before I get into some of these questions, there seems to be a lot of them today. I wonder what's going on with that. Well, I know what's going on. The bank rate went up and everybody's wondering what the hell's going on. But I want to touch upon the Porsche used car tracker. We saw a spike last week. It hit the top that I've ever seen it at 1,177 used Porsches for sale. For those folks that are new to this, every week I track how many used Porsches are for sale on AutoTrader, 100-kilometer radius from where I sit at Dufferin and Orfus. And I use that as a data point just to get an idea of what's happening with the toys, okay? And you could probably do the same for ATVs, boats, another type of luxury car that is deemed a toy. And I consider Porsche a toy. Okay, it's not your everyday car, but some people do use it as an everyday car, but for a family, it's not practical. But last week we hit 1,177, the highest ever since I started tracking this in September of last year, where we started off at 944. Dropped a little bit this week down to 1168, so maybe some people found some good deals and bought some, or people are just in shock wondering what to do next, and we'll continue to track this, okay? Now, on the bond market front, about a month ago, we're sitting at below 3%, okay? And the 5-year bond market's pretty much what lenders use to price their 5-year fixed rates. The bond market's gone up to 369. Last week it was sitting at 342, up 27 basis points, which is the equivalent of the quarter point hike by the Bank of Canada. The bond market spiked, which leads me to believe that there are going to be further hikes coming in the next little while, and expect a potential hike in July. So folks, this will continue to run as inflation doesn't get tampered down and GDP continues to run. I encourage everyone, get a hold of your MPs, regardless of what political stripe they are. We got to get rid of this carbon tax. This carbon tax has been inflationary. I know some people say, well, no, it's not, it doesn't really impact it. It fucking does, okay? And this isn't the time to hammer folks with more taxes, which impacts groceries, which impacts services. At the end of the day, groceries just don't show up magically on shelves. They have to get transported there, and they do that with trucks that use fuel. And if you're going to continue to tax people to death, those prices are only going to continue to go up. So get on the horn with your MPs, put some pressure on these elected officials to make some, very important decisions, because sadly, the lowest folks on the totem pole get hurt the most with these taxes, okay? They could give out all the rebates they want. It's only going to be more inflationary. It's more stimulus. You got to get rid of this thing. If it's temporary or whatever, you got to get rid of it to calm things down. So please do your part. Reach out to your MPs and let them know we need some relief. We need some help. And hopefully, they'll listen. But I don't have much faith in that. But, it's worth a try. We got Salima Haji, 3. Which one do you recommend, 2 or 3 or fixed? How long before rates start coming down? Okay, so I hate predicting. As far as which rate to choose, I'd probably lean to the 3-year. 3 years tend to get priced a little bit better than the 1 and 2 year. So you're probably going to get good value there. I wouldn't go 5 years so much. Rates are going to be high for a long time. The word that everybody's going to have to get used to is the word duration. The duration in which we will experience these high rates could be a long time. Okay, it's not going down anytime soon. Inflation has to get under control, and the spending needs to stop. So I don't know what the answer is as far as when they will start coming down, but we will see a form of recession in the very near future. Just to put things into perspective, I was reading some information. Consumer spending is up, and they're using credit cards. They're using lines of credits to spend. But here's something that is really telling. Disposable income in the quarter is going down. Savings is dropping. Household savings fell back to pre-pandemic levels of 2.9% from 5.8 in quarter 4 of 2022. So people are unable to save as much as they used to. That's an indication that household expenditures are dropping or increasing, and they can't save. And one thing that they did point out is that businesses are starting to see inventory stack up. Inventories are stacking up, which means sales are slowing down. We're starting to see companies starting to show losses. We're starting to see some layoffs. We're going to start seeing more and more of this. So the sad thing is, in order to beat inflation, there's going to be job losses. Not something to celebrate. I know Ron Butler covered this on his podcast, and it's sad. But in order for things to improve from a inflationary perspective, we got to start seeing unemployment go up. It's at record lows, and it's creating problems. And I think we're going to have to figure out over the next couple quarters where that number starts pointing to and where it's trending, and that'll give us an indication of how long it'll be before we start seeing any thought of a rate decrease. Now, keep in mind, the Bank of Canada Governor, Tiff, did indicate that further hikes could be coming if this inflation issue doesn't get solved and GDP continues to soar. So let's hope that things tighten up a little bit on the GDP growth perspective, and we could see some progress on leveling off inflation. But this is going to be a gong show. Got some more questions here. Flav7474. Yes, I'm one of them in negative cash flow. Unfortunately, condo owners that are renting them out are really struggling. The average negative cash flow is between $1,200 to $1,500, depending if you're one unit or one bedroom or two bedroom. That's a lot to swallow. You can probably do it 1 or 2 months, but over the course of a year or year and a half, you're talking 15, 20 grand plus in negative cash flow. And how many investors are willing to do that on an ongoing basis? And if they have multiple doors, okay? Now, the thing is, we are seeing more listings. Okay, I'm just going to pull up the TREB Market Watch report. We are seeing more listings, which is a good sign. For May, we saw 15,194 listings. Sales crept up. We will see more listings as people start choking and hyperventilating on these renewal rates and start realizing that, holy shit, my payment's going to go up how much a month? That's ridiculous. Maybe we don't need that much house. Maybe we downsize. And with more listings, there's going to be more opportunity for people to start thinking about doing that. So it's going to be something we will continue to watch very closely. And hopefully we see some progress in that regard so people could be more mobile from home to home instead of folks being stuck worrying about, well, if I sell, where am I going to go? We need more listings coming on. We need some people to maybe cash in their chips, sit on the sidelines before they start choking on not being able to make their payments. And we're seeing more of it. Boy, we got a big crowd today. Do we all sell in Ontario and move to... Where was the question? Where is it? Flav7474. Do we all sell in Ontario and move to other provinces and buy for much lower and have no mortgages? It's a thought. If everybody could work from home, it doesn't matter where you're going to be. But listen, a lot of people are migrating out of Ontario. We're seeing a significant number of people moving out west, out east. The beneficiaries are New Brunswick, Nova Scotia, and Alberta. So we are already seeing it. Now, a lot of people also have family here. They don't want to let them go. Friends of their friends. It's really tough to migrate. And I'm sure those that are in a position to do so are going to think about it and put some money in their jeans and not worry about mortgage payments anymore. But definitely a good question and a good thought. Thank you very much. Pamarna Van Diep, 231184. Is it going up to 6% interest rate? Well, the prime rate is at 6.95 now. So if you're in a HELOC, you're already paying more than 6%. And as far as the 5-year, we're getting close to 6%. And it's going to continue to go up, especially next week when banks always adjust over the weekend. We could be very well seeing rates in the 6s in the very near future. And if July Bank of Canada meeting has a further quarter point, we could start seeing 6s and 7s on the fixed rate side. So let's hope things get under control, and that's not the case, but the way it's looking, it's going to be ugly. I hate to be a pessimist, but it's just not looking good. A lot of questions here. Let me go to the grab bag. From the Optimist, has the market corrected to pre-pandemic levels, or does this signify something more concerning? I think this is a little bit more concerning, because what's happening is, as time goes by and every quarter passes, more and more folks come up for renewal, okay? And at these rates, which could have a very long duration, these folks that have been accustomed to a mortgage payment level that is comfortable are going to get squeezed a little bit, okay? Especially when we're talking increases of $1,000, $1,500, $2,000 more a month. That's a lot of money. That's $12,000, $18,000, $24,000 a year in after-tax income, okay? So remember, we have no benefit as Americans do that could write off the interest on their mortgages, okay? You can only do that here if it's an investment property. But on our owner-occupied homes, we pay our mortgage payments with after-tax dollars. And as you all know, if the savings rate is dropping dramatically, where are people going to come up with the additional cash flow? They got to start giving up stuff. And that's why I always focus on getting rid of the wants and only focusing on the needs, because as more folks come out of these 2.5, 289 mortgage rates and are now seeing high 5s, possibly 6s, that's a 2 times increase in interest cost. And it's going to be a tremendous burden if they weren't accelerating repayment and hammering down their debt to more comfortable levels. The fact of the matter is, we're a consumption nation. We're not savers, okay? We live it up. The majority are getting through month to month. Not many have emergency funds. And this is where cash flow gets really hammered when they see a huge jump in payments to their mortgage. And as I said many times on previous shows, we got 1.1 million mortgages coming up for renewal in 2023, and the majority are going to be in the second half of the year. And when you have folks getting mortgage renewal notices with these type of rates, it is absolutely bad, okay? So I think we got a lot to worry about, and I think what we got to do is focus on how do we get through it, how we could put together some strategies for everybody to prepare for what's coming and plan for an 18-month, 24-month run here. So let's think of that and try to get through and not worry about what's coming, because if you're prepared, you know what's coming. Okay, so let's work on that. C2.mom, do you think there will be any more rate hikes by the Bank of Canada for the rest of 2023? Yes. I don't know when. I probably suspect July could be one, or September. But I do think that if inflation doesn't curb itself, we're going to see another hike. And we got to be ready for it. Okay? Thank you for the question. GTA real estate investor. What would be the ideal fixed rate term at this point? Still 3 years, or start looking at a 4-year? I like the 3-year just because it's priced properly. And if you are taking a 3-year, go on biweekly accelerated, hammer down as much as you can, try to pound down the debt so that 3 years from now, you owe significantly less. That's the key. When you owe less money, there's less impact to a potential higher rate because you owe less, okay? And as I've mentioned many times before, I use this example. If you got a $200,000 mortgage and you pay 5%, your interest cost is 10 grand. If you could hammer it down to half of what you owe, to 100,000, and rates double to 10%, your interest cost is $10,000. So the key is you always pay the most interest when you owe the most. Hammer it down, and if rates do go up, that balance that's been reduced, has less of an impact to that rate, or has more of an impact to that rate because it's not going to hurt as much when you owe less. Okay, so the key is get rid of the debt. Joni.00, to lock in or not, 1 year, 11 months on a variable left, or lock in at 3 years? Okay, very good question. So the prime went up to 695. If you're at prime minus 1 year, 595. We could see another hike, and we might not see any reduction for a while. So if you got into a low 5% rate on a 3 year, you might be better off because you'll be paying less interest right off the hopper. And you may get caught a bit in that last year, but the savings during the first part could make up for that. So it's a math equation. If you need some help, give me a call. I'll walk you through it. We'll go with the last question here. Michael Zanella _ would it be a good time to buy in 2024 as the pressure mounts on mortgages? Well, if you need a home and you're in for it long term, it's always a good time to buy. I don't like bidding wars. I don't think bidding wars are healthy because you end up spending a little bit more than you want to spend. With more listings is going to come more choice. And if we start seeing an increase in active listings coming onto the market, I think there's going to be opportunity. Okay? Some folks will get tired of making the high payments. They've probably been in it 5, 10 years. They're going to make money on the sale. Okay? They're not going to be burdened by having a loss. What they're going to be trying to escape is the monthly payment obligation, which is going to get a bit out of control. So some folks are going to say, you know what? Time to downsize. I'm going to sell or move out, retire, whatever the case is. Okay? Some people make decisions for different reasons. You might be able to find some deals. Okay? But be patient. Be patient, get pre-approved. Get a documented pre-approval, which means income validation, all the documentations are validated. If you need help with that, please give me a call. I'll walk you through the process. But I'd definitely be able to help you out with that. And I think there could be some tremendous buying opportunities for you. For those of you that are on the show, I've been posting a lot on Twitter, been getting a lot of good feedback. Please follow me there at Vince Gaetano. In addition, I started a YouTube channel, and it's going quite well. As a matter of fact, I'm quite happy with it. I really would ask for a favor and subscribe. Okay, it's Owl Mortgage. If you could do that for me, that would be great. I want to leave you with this. There's a lot of people struggling out there, and I always ask this weekend, be kind to somebody. If you have the opportunity to buy somebody a meal, you have an opportunity to buy them a coffee while you're waiting in line, if you could just lend a hand. A lot of people are struggling. They struggle in silence. You know, finances are something people aren't very proud to talk about. They're always embarrassed by it. And chances are somebody in your circle is struggling. Do what you can to help. Don't judge. Give them a hand if you can. I think it'll go a long way, and you might put a smile on their face and just make that day seem a little bit better than what it could have been. So please do your best to help out. I'm going to close it off on that note. I'll be back next week. Stay safe out there with all the air quality advisories and stuff like that. Enjoy the weather. And please look at your budgets. Help yourselves out by doing the right thing and focusing on the needs. Get rid of the wants and get ready to prepare for what's coming. And we'll all get through this together. So thank you. Have a great weekend. Take care.